Because gold is so important right now, and he opened my eyes to Shanghai Futures and saying this is the PBOC by proxy. And I believe it because I think it's become very evident where gold fits into the equation. And here again, with positive real return in the treasury market, a strong dollar, outflows out of the ETFs, and very weak demand here in the United States, well, logic would tell us, geez, the price of gold ought to be cratering. But here we are at all-time highs today.
In today's episode, Andy Schectman shares his insights regarding gold, silver, and the economy. Recently, there have been significant movements in the gold market, particularly on the Shanghai Gold Exchange. Shanghai Futures has been making large gold deliveries, indicating that major players are strategically positioning themselves for economic changes. Despite a strong dollar and ETF outflows, gold prices are hitting record highs, suggesting underlying shifts in the global financial landscape. Silver also plays a crucial role in this scenario. Used extensively in industries such as technology and military, silver demand is on the rise even though current prices are low. The Silver Institute's supply figures reveal a substantial demand gap, hinting at a potential sharp increase in silver prices. This situation underscores the fragility of our economy, characterized by unsustainable debt levels, over $1 trillion added every 100 days, eroding trust in the financial system. Countries like China and Russia are amassing gold, signaling a shift away from reliance on the U.S. dollar. This transition necessitates preparation. Andy highlights the emerging economic framework will likely depend heavily on gold. Nations are discreetly bolstering their gold reserves in anticipation of these changes, which could lead to a significant revaluation of gold and silver. Considering precious metals not merely as commodities but as essential financial safeguards is advisable. In the face of global economic shifts, those holding tangible assets will be better positioned to navigate the changes. Make sure you hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Also, check our description for full credit details if you want to watch the whole interviews. Enjoy the episode.
The markets are being challenged by the central banks to stand for delivery, and that this is the Achilles heel to the Western bullion banks. And he pointed me in the direction of a story about a group on the Shanghai Gold Exchange called Shanghai Futures. I don't know if you're familiar with them. It's ZHONGCAI. It's a company, a futures company. And over the last month or so, we've been seeing large deliveries of gold out of New York that are going to China and related to the Shanghai premium. And there's been, once the metal gets sent over there, we've seen a very, very large drawdown in the numbers on Shanghai. In other words, it's someone's taking it off of the exchange. And what's interesting is I have said for a while, and it was a long conversation I had with this gentleman, and I thank him for it, for pointing me in this direction, because it's very compelling as to what I was talking about. He was saying, look, this entity is for real, and they are standing up against JP Morgan. And I did some digging into it and found that as of last week, while we were at the show, Shanghai Futures had over 31,000 long positions across all sorts of gold contracts with a margin of 21 billion yuan, or 31 tons of gold. And they also have massively long positions in silver futures contracts. And they're standing for delivery. And the counterpart to all this, the short position, is JP Morgan. They're getting crushed. And so what happens normally is that the bullion banks will suck in the speculation. They'll absorb all the buying pressure from the hedge funds. the big funds, and they'll absorb all that pressure because they're borrowing money from the Fed at next to nothing, whereas the hedge funds are borrowing it at a much higher level. They have much more money, they get it at a much cheaper rate, and they know where the pain points are. So they suck in the speculation. Then they step on the position after they absorb all the selling or the buying. Then they step on the position and step on the position until the managed money capitulates. And it's a rinse, wash, and repeat thing that's been going on forever. I always wondered, why do they keep coming in and doing this? But what's interesting right now is that Shanghai Futures is standing for delivery. And I believe that this is a proxy for the PBOC. Who holds a margin account of 21 billion yuan or 31 tons of gold? And massive amounts in silver futures and standing for delivery. We keep seeing large amounts of gold leaving the COMEX and going to China through a contract that was developed in 2015 by the CME group that allows for delivery to Brinks, Hong Kong, which is a COMEX facility. It is then trucked to the Shanghai Exchange as all metal has to go through there, and it's disappearing off the exchange. Is it the PBOC doing it? Don't know. But what I am simply trying to say to you is that because gold is so important right now, and he opened my eyes to Shanghai Futures and saying this is the PBOC by proxy, and I believe it because I think it's become very evident where gold fits into the equation. And here again, with positive real return in the treasury market, a strong dollar, outflows out of the ETFs, and very weak demand here in the United States, well, logic would tell us, geez, the price of gold ought to be cratering. But here we are at all-time highs today.
In today's news recap, silver price climbs amid Fed rate cut, anticipation, and political uncertainty. Silver's market value experienced a notable rise amidst a buoyant trading environment and a strengthening U.S. dollar. This uptrend in silver reaching a daily high of 30.88 largely stems from the market's increasing belief that the Federal Reserve will reduce interest rates starting in September. This sentiment was reinforced by Fed Chair Jerome Powell's recent affirmations, which have sustained lower U.S. Treasury yields, heightening silver's appeal as it offers no interest yield, making it a more attractive option in a low-rate landscape. The unsuccessful attempt on Donald Trump's life has paradoxically bolstered his 2024 presidential campaign, igniting expectations of diminished regulatory constraints under his potential administration. This prospect has prompted investors to lean towards riskier assets, potentially dampening the momentum for traditionally safe assets like silver. Moreover, the U.S. dollar's rise, propelled by the anticipation of Trump's policies inflating government debt and spurring inflation, has generally restricted the gains in silver prices. Recent data highlighted a reduction in U.S. consumer prices last month, marking the first decline in over 4 years, with annual inflation cooling to 3% from 3.3% in May. Powell hinted that rate cuts could commence before inflation fully reverts to the 2% target, aiming to stimulate economic activity by lowering borrowing costs. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Around the world, even including the Canadian dollar. I mean, in most currencies, it's pretty damn close to doubled or more over the last 2 years or 3 years. And so there is an amazing amount of demand for gold at a level above all of us. Mm-hmm. And that's what people need to understand. I've been trying to hammer home. Do not listen to the rhetoric. Do not look at the price. It is the ultimate tool of misdirection. When you see someone standing up against JP Morgan with a margin account that has control of 31 tons of gold, and they've been standing for delivery, what more do you need to know? When you see India buy 1.5 times the amount of gold they bought all of last year and bring it home, along with 100 metric tons that they've held since 1991 at the Bank of England, what the hell more do you need to know? The biggest money in the world is front running what is coming. And if you do some digging, and last week we talked about the unit and how all this will trade over Project Enbridge, you can see that we are moving to a system that will look at gold in a very, 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 very different way, and silver too. But yeah, I mean, what did I learn? I learned that there weren't a lot of people there. I learned that the investing public is asleep at the switch while the biggest money in the world, and no surprise to me, this is how it always goes. The biggest money in the world positions themselves while the rest of the people are fixated on the shiny objects called Nvidia, Bitcoin, and Apple, and yet gold keeps marching higher, outperforming everything, and without any fanfare at a period of time where everything in this country, from positive real yields, strong dollar, and outflows out of the ETFs, and very tepid retail demand, would say it should be tanking. So, you know, contrarian indicators abound all over, from the number of people at the show. It's a great show. It's the best one. But I'm so darn busy there, I never get a chance to listen to too many of the other speakers. But the conversation I had was as interesting as it gets. I had another conversation that I will talk with you offline about, that maybe next week we'll talk about. I've really wrestled with what I want to say, and I'm going to set I guess a teaser, but I'll talk with you offline. It's really some, I don't even know how I'd classify the information, but it's something I really want to talk about. I've asked permission and was granted the permission. I still don't know that I want to talk about it. Maybe next week we will. You and I will talk offline. But yeah, to me, that was the most important thing that I took away from the show, was my eye-opening awakening to what's going on in the Shanghai futures market, was Shanghai Futures.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.